Are you looking for a fund to invest your money? Just make sure you look at the funds that has a history of paying dividends for a long time without big changes, and one of those ETFs is this one I'm going to talk about today. So you can see the first time they paid dividend was in January 31st, 2023. And of course, the last payment was on April 30th, 2024. So altogether, that's 16 months. So it's about a year and 4 months. And we can see they've been paying consistently. I mean, of course, there's a difference in payment, but end of the day, on average, we're going to get 77 cents. And since inception, they've paid about $12.29. And we're going to see in a bit why this number matters, right? This is called KLIP, which is a CoinShare China Internet and Cover Call ETF, okay? So what this fund does, overview of this ETF, CoinShare China Internet and Cover Call Strategy ETF seeks to provide current income by following cover call or buy right strategy. KLIP's buy shares of CoinShare China Internet or KWeb, that's an ETF, and write or sells corresponding calls option on KWeb. Both KLIP and KWeb are benchmarked to the CSI Overseas China Internet Index, which tracks the performance of the investable universe of publicly traded China-based companies in the internet sectors. KLIP can provide investors with attractive current yield while retaining capped participation in the potential price gains of KWeb. If we look at the KWeb, which is CoinShare China Internet, you can see the price right now hasn't done that great. I mean, within a year, within 5 years, it was all the way down. It was all the way up from 89 to right now is about 79. So within the time that this ETF was incepted up to now, we can see the KWeb itself, from that time, it hasn't done any great. The features of this fund, right? So KLIP sells cover call option on KWeb, an established ETF with a deep option market. KWeb provide exposure to the China internet sector, which has historically been more volatile than the US internet and technology sectors. So the Nasdaq, if you compare the Nasdaq, of course, the US tech sectors and versus China is more volatile. So that way, the more volatile, of course, the more they can generate those income, right? A KLIP has the potential to provide higher yield than cover call strategy based on the US and other markets, like US or European markets. So combination allocation of both or to both KWeb and KLIP can help produce a targeted growth and income strategy by maintaining upside while trading performance uncertainty for more stable income. KLIP provide monthly distribution. That's pretty good. Right now the yield is almost 53, and it pays monthly. Performance, if you look at the daily performance, we can go to chart and see right now CoinShare China Internet Cover Call. This is the ETF itself, right? So the other one I showed you, this one is the ETF that the KLIP is writing call on, which is a ETF is provided by different company. This CoinShare, which is the ETF that generate income, because this KWeb here does not pay any dividend, so you're not gonna get any money from this. It's more of a growth. So if you're believing in Chinese market being that will recover and is gonna go up or will do better than the Nasdaq, the US market, then this is the place to buy at this point because it's cheaper, right, than where it was before in 2021, all the way at almost $90. So now, if we look at this one here, we can see the performance of this one. As I've mentioned, 52-week range is between 1418 to 1991. But at one point it was all the way at 24. Now it's at 14. So it has lost massively. But if you look at the 5 year, that's a chart. 5 years, 1 year, still hasn't recovered. So now, if we look at the annualized return on this ETF though. So this is the data from the 30th of April, has returned about 10.35%, right? If you look at the index itself, has returned negative 13.40. So why this is important and why this, we can see the chart is going down, but they on this website here, which is CoinShare website, it says has returned about 10%. The reason being is that number I showed you. Remember earlier I showed you this number here is very important. So why? This is because when you take this $12, you add to the price. Of course, is included on that price gain, right? If you take all the money you invest, then right now your price is $26.92. Is not $14, and that's what that performance comes with 1035. So whether you're an investor who wants to invest in reinvest your money, of course, and generate more income, or you're an investor who wants to take the money and use it, so that's up to you. But I'm just giving you performance of these ETFs using both metrics, right? Now, if you growth of $10,000 right now, if you put $10,000 since inception, which was January 12, 2023 to now, so a year and 4 months, then if you put $10,000, reinvest all the dividends, your money right now will be about 11,000. Right now will be 11,473. But remember, you are buying at lower price and you're buying at higher price, so your dividend you're receiving will be way more than what it is right now, right? So, and you have more shares than what you had before. If we look at the top holdings, this fund is not like synthetically. It doesn't do like yield max ETFs where they do a synthetic cover rating. This actually holds the Crenshaw ETF, which is KWEB, directly, and then the allocation of that is 97%. So pretty much everything is invested on that ETF and red calls on it. But also they do have a little bit of State Street, US bond, which is only about 5%, which is this one here, GVMXX. So of course they have to have some sort of like government bond where they put some of the money, but we can see the bond here is very little, but majority of the money is invested on KWEB. Now that's about it for this ETF prescription. And if you want to know more about this ETF, I actually made a full video about this, a few months ago, about 7 months ago. Now let's go to a spreadsheet to see how much you can generate using this ETF. If we go to the price right now is 1463, and a current payment meaning the last payment they just paid April 30th was about 53 cents. Using the current price with the current dividend or the last dividend they paid, your annualized return or yield is about 43%. If we go on an average meaning since they paid, you combine all that income, they paid about 77 cents, which is the number I like, because average will give you the really good picture, guys. So now your annual distribution yield will be 63.16, which is not bad. So now if you invested 100,000 or 200,000, how much you're gonna get? You're gonna get 3,623 at 100,000, and annual income will give you 43,472. And of course, if you do 200,000, you're gonna get double that, right? Which will be 86,945, or monthly income will be 7,245. This is the current income, which is only 43 cents now. 53 cents. Now, if you add that up, so you want to say, okay, I'm going with average, which is more of a true picture, with the same amount of money and the same amount of share, of course, now you're going to get 5,263, and then you're going to get 10,526 a month, or annual income will be about 63,158 to 126 316. That's a lot of money. You can retire with this money anywhere in the United States, except if you live on Beverly Hills or something like that. So that's quite a bit. But you might be wondering, I don't have this type of money. I have a little bit of money. How am I going to generate? Well, don't worry, because I have that for you. Again, if you still like this content, just make sure you subscribe and give me a like. Now, nothing changes except your money has changed from 200,000 to 10,000. Now, if you put $10,000, you're gonna generate about 4,347 annual income, and then if you put 20,000, you're gonna generate about 8,694, and monthly income will be between 362 to 725. Now, on the current income, right? But if we go to on average income, which is 77 cents, with the same amount of math, with using $10,000 and $20,000, you're gonna get about 6,316 annual income, and you're gonna get 12,632 annual income. That's just only $20,000, guys. So that if you have $20,000, which a lot of people would have at least 10,000. If you invest $10,000, you're gonna get about 526. That 526 between 5 to 1,000, that will be maybe the money can help you if you're really struggling, maybe it can be a money that can help you pay all the bills, all the Netflix, all the Spotify, all the internet bills can be paid just using this ETF. And of course, if you want more, or if you want to invest more, then you can also grow that money from 10,000, 20,000 to 30 to 50 to 100,000. So the math changes on how much you can generate based on how much you put, of course. Again, guys, this is how you can generate between 3,623 to all the way to 10,526 a month. Or if you don't have that much money, this is how you can also generate between 362 all the way to 1,053 monthly by investing only 1,000 to 20,000. I really appreciate for people who are giving recommendation or suggestions on ETFs that I should look into. So if you have any ETF that you think I haven't covered, just make sure you leave a comment below. Or if you want me to put a combination of ETFs that I made a video, for example, a couple of days ago, combination of ETFs, for example, KLIP and other ETF, make them as one portfolio. Just make sure you leave a comment below which ETF you want me to cover. I really appreciate your suggestion. There you have it. That's all I have for today. Till we meet on next video. Bye bye.